boom, 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 boom. Oh my God, stocks are going down. Boom, boom, boom. Index funds are in a bubble. Welcome back to Strong Man Personal Finance. Y'all like my hair? That's right. That's how lazy I am. I didn't even comb it. Welcome back. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term bobblehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. Go buy it. Give me your money, please. I want your money so bad. And oh my God, are we going to talk about something special today? We're going to talk about me selling an index fund. That's right, ladies and gentlemen. I am actually going to sell an index fund Monday when the market's opened. And I'm going to tell you exactly why, ladies and gentlemen. And you're going to be freaking shocked. Strongman selling? I thought Strongman said you should max your tax advantage accounts and buy total world stock market index funds. And that's it. Well, guess what? That's exactly what I want to do. So last year, I already maxed my 401k at my lovely NASA job. Great memories. Such a great place. And I also maxed my Roth IRA and my wife's Roth IRA. So I had extra money to invest in taxable accounts. So what I did is I threw a bunch of money into Fidelity, and I mostly bought index funds. You know, I bought like a couple speculative stocks with like $500-$600, whatever. But the vast majority of my money is in index funds. Now we're going to go check out this PowerPoint presentation, and I'm going to show you exactly what I'm going to do. And the whole purpose of me selling is to tax loss harvest. That's right, ladies and gentlemen. I want a tax deduction on my next tax return. Now, if you are considering copying what I'm about to do, you need to be freaking careful, okay? You should have your own CPA. Go consult them. Make sure you're not making any stupid mistakes, and don't just trust what I do. But when I'm looking at this, I believe I can successfully defend an audit from the IRS by selling this certain index that I'm going to sell and buying another index. So first of all, let's go and see what I'm going to do. Let me share my screen. So this is my Fidelity brokerage account, and I took a screenshot of one of my investments. So you see, I actually have a tiny wash up there. You see, I have roughly $16,000 cost basis in VXUS. That's the Vanguard Total International Stock Index. Every stock in the world outside of the United States. If you use this index and you use VTI, you slap them together, 60% VTI, 40% VXUS, you roughly have VT. Now, when I bought this, I said, okay, I have all this extra money. I'll be like, okay, I'm just going to throw this into VXUS. Is it going to hurt? No. And I can always tax loss harvest later. So as you can see, I have a $3,000 loss. You're so stupid, strong man. I 10x'd yesterday. You have a $3,000 loss. That's right. The market's down. I have a $3,000 loss. But I look at that and I say, there's an opportunity here. Because if I sell this at a loss, and then I immediately reinvest it into another index or security that is not substantially identical, I can use that $3,000 loss to reduce my taxable income. Because if you think about it, everything's down. VT's down. VTI's down. VXUS is down. If I sell VXUS and put it into VT, what am I losing? It's not like I'm selling something low and buying something high. Everything has gone down. But if I can get a tax deduction and reduce my ordinary income potentially, this is a huge freaking deal. So let's talk about what could happen if you screw this up. Let's say you have this genius idea. You're going to sell VXUS. You're me, you're strong man with my jacked up hair this morning. Sue me. You decide to sell VXUS and you're like, oh, I'll take the loss and then I'll just buy it back the next day. It doesn't matter, right? Or I could sell it and then buy it back 10 seconds later and I can have that loss on my tax return. That's a wash sale, ladies and gentlemen. That's right. If you buy something or you sell something and you buy something within 30 days of each other, you trigger a wash sale. The IRS will disallow your loss and you'll have to add that loss to the basis, how much you paid for the stock that you purchased. For example, here is a wash sale. So we got Jeremy down here. Jeremy's a genius. He took a accounting class in college, so he's basically a CPA. He decides that he's going to sell one share of Tesla my Esla, Le Fufu my Pupu stock at a loss of $3,000. Wash sale my clash sale. And then he says, I'm going to buy it right back because then I can take that $3,000 loss and I can use it on my taxes. Taxes my taxes. So he goes ahead and the next day he buys one share of Tesla my Esla, Le Fufu my Pupu stock for $10,000. Well, as soon as you buy, here's how I do wash sales. Okay, like I had a little trouble with this when I was studying, but basically, if you're looking at your transactions, look at all your buy orders and let's pick out one buy order, and then look 30 days before and after that. If you sold a stock at a loss 30 days either before or after that date that you bought that share, the same stock, you have a wash. Now, if it's a different stock, it doesn't matter. I mean, if you sell Tesla my Esla, Le Fufu my Pupu, and then you buy VT, that's not a wash. I mean, they're not the same thing. Tesla my Esla, Le Fufu my Pupu is a trash stock. VT is a total world index. They're not substantially identical. So you wouldn't have to worry about a wash sale. But if you buy and sell the same freaking stock within 30 days and you have a loss, you are going to trigger the wash sale rule. So what happens is Genius Le Fufu had a loss of, and he said a wash sale was within 60 days. It's 60 days if you look at either side of the transaction, but the rule is actually 30 days. He's such an idiot. So if you had a loss of $3,000 and you then pay $10,000 the next day to buy a new share, your cost basis is actually going to be $13,000. What is your cost basis? When you buy a stock, whatever you paid for it, plus fees, whatever, that's your cost base. That's how much you paid for the stock. That's the price you paid. And you need that because when you sell the stock at some point in the future, your gain or loss is determined based on comparing what you sold the stock for versus what you bought it for. Cost basis, basically what you paid for. Okay. This is a wash sale. So you don't get to use that loss. I mean, you can use it at some point in the future when you sell Tesla my Esla, Fufu my Pupu at some point. But in the meantime, you don't get that tax deduction. So you have to be really careful. So my plan is I'm going to sell VXUS, which is the total international stock market index, and I'm going to put it into VT. I mean, because I'm a VT shill. I like VT. And I believe that these two securities are not substantially identical. VXUS has all international stocks. VT has US and international stocks. So I don't think this is going to be a wash sale. We'll see. Oh my God. Imagine the IRS disallowed this. Yeah, the total world and the total international is the same thing. Strong man. Whatever. That's the risk I'll take. So that's the plan. Now let's go look a little bit more about wash sales. So you can actually go on irs.gov. If you have any questions about stocks or like taxes, just go on irs.gov. Like I'm pretty new to doing taxes. I've been working at a tax firm for about 6 months. And when I have questions, the first place I go is irs.gov. Okay, you can't know everything. But you can see you cannot deduct losses from sales of stocks unless the loss was incurred in the ordinary course of business. Okay, you're not a dealer of stocks or securities. A wash sale occurs when you sell or trade a stock at a loss within 30 days before or after the sale. Look at your buy. If you have a sale within 30 days on either side and it's a loss, you have a wash. Your broker will probably catch that. Now, if you buy substantially identical stock or securities in a taxable transaction, that's your wash. Now, another thing you don't want to do is sell a stock in a taxable account and then buy that stock inside a tax advantage account. Let's say you have VT in your Robin stock account and you sell it at a loss. And then you go ahead and you buy it inside your tax advantage account. You transfer the money inside your IRA. Well, you have a wash because you bought a stock and you had a loss within 30 days. But the basis, you still get that basis increase. So at some point in the future when you sell it, you're still going to get that loss. However, if you bought that inside a IRA, a tax advantage account, you never get the loss. It's a permanent loss. So never, ever sell something at a loss and then buy the same thing inside an IRA within 30 days. Just don't freaking do it. So that's a wash sale. So I 100% I'm going to save $3,000 on my taxes. Now you look, this is a sample tax return. Okay, this is the 1040. I know you're getting bored. So this is an example of what my tax return is going to look like. So I make $5 a year. That's in my wages, salaries, and tips. And you see this line right here, capital gain or loss. So anytime you buy or sell stocks, you add up all your gains and your losses and you net them out and blah, 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 blah. And they all flow through here, capital gain or loss, attached Schedule D if required. Now, what's going to happen here is this $3,000. Let's say that was my only loss. I didn't have any capital gains distributions, whatever. I'm going to save $3,000 on taxes with this. Now I'm in the 22% tax bracket, so I'm a loser. I saved myself $660. What did I do? I sold VXUS to buy another index. That's a pretty good deal. Pretty good deal to me, ladies and gentlemen. So that's the plan. I'm probably going to sell that, Monday or Tuesday. And I'm going to make some money. But y'all need to be careful. If you have something that, you want to do the wash, don't just go out and do a freaking wash sale. Or don't go ahead and just don't go and sell a bunch of stocks. Like, you need to talk with a trusted advisor to make sure you don't screw it up. Selling VT for ARK. Yeah, that's the plan. The toilet plunger. Yeah, I like that one. Does 30-day wash rule apply? I don't think it does for my scenario. I don't know how the IRS could argue. And that's the scary thing, is the IRS can always come out and be stupid. But, I mean, like, if you sold Tesla and you bought Berkshire Hathaway, they're two entirely, there's no argument the IRS could make. However, to me, it's like, well, if I sold VT or VXUS and I bought VT, well, there are some equivalencies, but they're not, substantially identical. So, I mean, but the IRS can always argue this crap. I'm pretty confident in this trade. I'm not worried about it. But like I said, you definitely want to consult an advisor before you do this. Strongman said I could do this. So then you just get a freaking disallowed wash sale. The first 40K filing single and 80K for long-term capital gains is taxed at 0% at well. Well, it depends. You got to add up your ordinary income, and that'll boot, because you put your ordinary income first, and then your capital gains get stacked on top of that. So just because you think you're going to get a 0% tax rate doesn't necessarily mean that. You got to be careful with that. I thought if you sold a cannabis stock and bought the 30 wash. Well, is it? I don't think so. It's a different stock. As I said, you need to go talk to your advisor. Like, I can't just say, oh yeah, that's not a wash sale. But I mean, it's not the same stock. So if you look at the IRS, go look at the IRS. It says, if you buy a substantially identical stock or securities, well, here's a company and then here's an entirely different company. That's kind of a crappy argument that the IRS can do. So, but like I said, when it comes to tax, there's so much, I don't know, there's so much crap. In Czech Republic, you can buy and sell the same day. No such thing as a wash sale. Also, you don't pay tax. Woo! Really? That's kind of just, does the Czech Republic give you can you reduce your ordinary income with a loss? Because if you can't do that, okay, the wash sale doesn't really matter that much. But it just seems like it opens you up to, it hurts the government, because if people are smart, they'll just do as many washes as they can and like massively reduce their taxes. So there's a reason these wash sales are in effect, because people were abusing it. VTI or VU, S&P or QQQ. Yeah, see, I would say both of those are fine personally, but like I said, you need to really do the research, because I've never personally done a wash sale before. I've never really sold indexes. This is my first time doing it. So, and I'm just going to do it just for this one harvest. And then eventually I'm just going to have all VT. I'm not going to harvest anything. So you need to go talk to an advisor. I personally think if it's not the same stock, you're probably going to be okay. But I'm not going to sit here and tell you, oh yeah, that's fine. So do your freaking research. Yeah, they're two different indices. I'm not worried about it at all. I don't think the IRS is ever going to disallow that. But you got to always keep in mind that the IRS can be stupid, but I'm not worried. Strongman should shrill a flat tax. In Taiwan, you can have profits up to $500K without paying any taxes. Anything above your tax. Woo! What are we doing in the United States? What are we doing? Yeah, see, that makes sense, because in the U.S., you can deduct up to $3,000 per year of your stock or capital losses from your ordinary income. So you can abuse the crap out of that. And I mean, this isn't what I'm doing is not abuse. I mean, it's within the law, but you get, I'm saving myself $660 by doing this. And what am I doing? I'm selling one index for a more diversified global index. Man, what a loss. Well, go talk to your tax professional. Okay. I'm not your freaking CPA. Anyway, that's it. That's the plan. That's the only reason I'm going to sell this. I'm going to put it in VT and bada boom, bada bang. And worst case, even if you get a wash sale at some point in the future, you can actually, you still get that tax loss benefit because you're increasing your basis, which is good because when you sell a stock at a gain, the higher basis means you have a lower capital gain, but you need to be careful. Okay. I'm not saying, oh, sell this and buy this because IRS scares me, man. I don't know. I'm a coward. They scare the crap out of me, but I'm not worried about this. Anyway, that's it. Have a wonderful, delicious, superstitious, cockalicious day. Cheers.